everyone. I am here with Tyler Tatum with Bank of England, and he is here to help with a lot of questions that I'm hearing lately. So I'm going to give him the opportunity just to introduce and give him a little bit of a background, and then we'll dig in some questions that you all have been asking about.
Absolutely. Thanks for having me, Kim. My name is Tyler Tatum. I'm a residential mortgage banker with Bank of England Mortgage here in Jacksonville Beach. I've been with the Beach branch for about 8 years now, and we specifically work with home buyers to help them in financing the purchase of their properties, as well as helping them with refinancing their properties also. Kim and I hear a lot of the same questions in the market right now. What's the market doing? What are interest rates doing? If I get that question 10 times a day, it would be a normal day for me. It's coming more like 100 times a day. So we were hoping to put a little information together for you, some bullet points that'll help you answer those questions and share the information with your friends and family.
All right. So the first one, I think a lot of people have heard about it, but not really quite sure what it is. And that is, what is the hardest hit fund? It is an opportunity right now, and it is for first-time home buyers, but it is very interesting. And
yeah, absolutely. If you're friends with, or if you follow a realtor or a lender on Facebook, you've probably heard this term to no end over the last 30 to 60 days. The Hardest Hit Fund is actually a federally subsidized program. It's a grant program that provides financial assistance in the form of down payment and closing cost assistance for first-time home buyers looking to buy a home. We are fortunate that we're one of the Duval County and Clay County are two of the 5 counties that are available to offer this program currently this go round, and the funds are limited. They just opened them up March 4th, which was just this past Monday, and there's $20 million in this account to allot for $15,000 loans, and they've already used up $5 million of that in 3 days. So it's something that we want people to be aware of.
Yes. It's a great opportunity, so if anyone, and again, we have more questions, but if you are interested in that, we can give more details about that one. So question number 2 is even more broadly asked, and that is, Kim, are we in a recession? What's going on? Should I hold on to my house? Should I not buy right now? What should I do? And sometimes we hear a lot of what's going on in the internet, and it can be overflowed and inflated. So I thought, what best by giving us a little bit of an economical forecast on how you could plan properly. Should you buy? Should you put your house on the market right now?
Yeah, absolutely. So we can look at this in a couple of different ways, from obviously the lending side of things, but also owning my own properties and having conversations with experienced agents like Kim every single day. We're getting the same question: are we in a bubble? Is the bubble going to burst? What's going to happen? Why are home prices as high as they are right now? And it's really important to align yourself with an experienced realtor that can educate you correctly on what's going on in the market, and then also with home prices. Right now we're seeing slightly inflated home prices because sellers' expectations aren't really in line with what buyers can afford at the given moment. The biggest struggle right now for closings and for buyers submitting offers on homes is buyers' affordability. Obviously, in being in this industry for 8 years, I can remember a time when interest rates are higher than they are right now. But for a lot of people that have come to the market in the last 5 years, they're used to seeing interest rates sub 4.5, sub 4, even in some cases in 3%, depending on their loan program. So we're seeing higher interest rates, which are affecting buyers' affordability. Home prices are higher, which is affecting buyers' affordability as well. And then there's just not a ton of inventory on the market right now. So for me, the comfort that I take in all of this is knowing that the loans and the closings that we're doing now is kind of built on the backs of kind of, in all honesty, hard to obtain mortgages. Anybody that's been doing this long enough knows that it's not as easy as it used to be to get a home loan. We have to verify income, assets, and credit. And the previous housing crisis was kind of built on the backs of stated income loans, or option arms, or predatory lending. People would get in these homes, and then they find out 6 months later they're late on their first mortgage payment, and it starts snowballing.
Yeah.
So I do take comfort in doing this for, like I said, about 8 years now. We're always verifying income, assets, and credit on every single loan program that we do. Even our 100% financing loans, we still have to verify income, assets, and credit. And it still boils down to those 3 things. So that does give me comfort that this go around, it's not a repeat of some negative things we've seen in the past.
Well, let's piggyback on this next question with, do you have any guidance or information you could give about someone that's hesitating right now with the interest rate?
Right.
Any concerns with, is it going to increase? What are...
Yeah, I mean, that's the second biggest question I get after the big, it's kind of two big R's right now, recession and rates.
Yeah.
And, what we're seeing right now with interest rates is they are going up. They increased, it's been almost one full percentage point since this time last year. There were 4 interest rate hikes by the Federal Reserve last year. And the reason why rates are going up is because the economy's doing better. When people have more discretionary income, when wages are up and employment numbers are up, then the Federal Reserve looks at it and they say, okay, well, maybe it will be healthy for us to increase the interest rate slightly. People have the ability to pay a little bit more for the money that they borrow. I think it's really important for people to look at interest rates, not with just a magnifying glass on what's happened over the last 4, 5, 6 months, over the last year. It's important to look at the big picture. 10 years ago, the average interest rate on a 30-year fix was 6%. 10 years before that, it was 7%. 10 years before that, when the majority of my buyers were either not in the real estate market or they weren't even alive at that point in time, interest rates were 10.3%. So if we're talking about the average rate on a 30-year fix right now is 4.625, historically that's amazing. And no one has a crystal ball, but what I can tell you is I do anticipate interest rates to increase. I see them, they're already a quarter point away from 5% right now in some instances. So I see them going over 5%, even into the mid 5s. We can't tell you what they're going to do. No one has a crystal ball, like I said, but we can tell you what history shows us. And history shows us last year that when the Fed says they're going to raise their interest rates, they actually do. So, all I can tell you is what we see in front of us right now at the moment. And again, rates are smoking for most scenarios. But I will say again, the rise in interest rates could price people out of being able to afford a home. I mean, if you look at buyers that are in the market right now, can afford 10% less of a home than what they could afford this time last year because of the rise in interest rates. Almost a full percent from this time last year. So we're looking at more creative options now. Instead of the doom and gloom of rates rising, we're looking at, well, how can we counter that? And the ways you can counter it, put a little bit more down on your down payment. Most people don't realize that an 1/8 of a point change in their interest rate only affects the average monthly payment on the average loan size by about $13 a month. So it's like I spent more than that at Native Sun for lunch today.
I was about to say.
So if you're talking about a quarter point difference in your rate, now you're talking about less than $30 a month in the difference in the payment, and that could be made up elsewhere. The fastest way that we're able to make up that difference is by getting a little bit more of a down payment. So we just talked about an 1/8 point change in your interest rate changes your payment by $13 a month. If you just put an extra $5,000 down on the average loan size on a 30-year mortgage right now, it lowers your payment by $25 a month. So, we're seeing a lot of buyers that are putting a little bit more money down. They're first-time home buyers getting gifts or doing down payment assistance programs so that they can lower their total monthly payment. And then Bank of England offers a unique program that allows a buyout of monthly mortgage insurance. So if interest rate increases by a quarter of a point, but you're able to save $100 a month on your mortgage insurance, then you're still netting a positive savings on your monthly payment of $85 a month. So there's all kind of options out there. There's more to a mortgage than just the interest rate. I think that's the most important thing.
Yes, which I think most of us focus on. Another thing too is, do you see buyers when they secure the house and the mortgage, even a year down the road, paying one extra payment towards principal to possibly shave down some years on the mortgage?
Right, absolutely. And that's another reason why it's great to work with a boutique style lender such as ourselves. And not to keep going back to that, but we really do provide a mortgage consultant type approach. We can run amortization tables on day one, schedules to show people if they make one additional payment a year. Depending on the size of the loan, it could save you three years off the back end of your loan. So now with just one additional payment, you got a 27-year mortgage, effectively. And then you're paying less interest for those last 3 years, so your effective interest rate might not be a 4.625, maybe it's only a 4.375. So, a lot of people get accustomed to asking, what's my rate, what's my rate, because that's the easiest thing to compare. You really need to be looking at what's my payment. Obviously, closing costs as well. You want to make sure you're not paying an exorbitant amount of fees for the rate that you're getting. But the third thing that we're seeing people do right now to lower their, we've got the upfront mortgage insurance, we've got a larger down payment. And the third thing that we see people doing to lower their total monthly payment is to do discount points. We're starting to see those come back.
Okay.
And those are actually coming back at the request of my clients, actually. I have people that will talk to me and they'll say, okay, well, my rate today is a 4.5%. If I paid an extra $2,000, what could I get an interest rate down to? And oftentimes that'll save you an eighth of a point or a quarter on your total interest rate, knocking that payment down another $13, $27, $30 a month, whatever it may be. And as long as people plan on being in this home for, I'd say, 3 to 5 years or more, it makes sense to pay points oftentimes.
Gotcha.
So you recoup that initial investment. So there's really two reasons why people are hesitant, two reasons why buyers are hesitant to break into the market right now. They either think home prices are too high or they think interest rates are too high, and they want to wait for some of those to come down in some way. If you're renting a home right now because you think the average interest rate is too high, keep in mind your interest rate on your rental payment that you're making to your landlord every month is 100%. So like, you're not building equity, you're not building your net worth, you're not purchasing an asset, you're literally paying down the principal on someone else's asset. So don't let the potential for increased interest rates or higher rates that we're seeing right now be the only hindrance or the only thing keeping you from purchasing a property.
So the other question I have, what was my last, but I think I might have to throw a couple
Right.
extras, is do you have any new lending packages that would be good for consumers to know about? Is there something out there that someone might not know?
Yeah, so I think a kind of fallacy when people are looking at mortgages is that there's only a few program types. There's your 4 big ones, but BOE, we actually offer, I added it up earlier, it's about 25 different types of mortgages.
That's crazy.
And then you can change the terms, you can lower the term, you can increase the term. There's all types of different programs out there, 8 of which are just geared towards first-time home buyers. We're seeing a lot of VA loans right now. We're one of the largest lender in Northeast Florida for VA mortgages. We close them in record time compared to those VA-specific lenders that you hear out there. We see a lot of VA jumbos, believe it or not, just due to our vicinity here in Northeast Florida to the naval bases. A lot of people don't realize they can use their VA loan, their VA benefits for a jumbo mortgage. The other thing that we're seeing a lot of, I talked about the hardest hit fund, but I did want to mention that if you're interested in that, to go ahead and submit a loan application to a local lender right now, because the program's not going to be available here very much longer. But we do have our own internal 100% financing program for people that don't meet that first-time home buyer requirement, which is interesting. And again, our whole approach is to complete a loan application. I prefer to do those in person, if at all possible, here at Kim's office or at mine. And we're going to sit down and we're going to find out what your goals are. We're not just going to look at your credit score and your income. We're actually going to talk to you and preferably talk to your family to find out how we can fit into your life as your mortgage consultant for the long haul.
All helpful stuff. So I know we need to think in the bigger picture with interest rate, but I'm going to go back to it.
Yeah, absolutely.
So we are experiencing this, like when I have a buyer and I hook them up with lenders, they typically will pick the best rate.
Right.
But then when it comes to it, it's not the best situation. So do you have any advice on how you could truly find out about those hidden fees? Because, if someone is getting like a 4% versus a 4.5%, it, too good, something that seems like a sure thing most of the times isn't. And unfortunately, a lot of people are finding this last minute.
Right,
So,
absolutely. And unfortunately, to your credit, they're finding this out 2 to 3 weeks after they're already under contract.
yes.
And I hate to say it, but for some lenders, luckily we don't deal with this a ton in our competition here locally, but for some lenders, that's the whole goal, is to show an extremely low rate up front, extremely low cost and fees up front, with no commitment that they'll follow through with that. So the first time that something changes, the first time that your income is a hair off on your pay stub that you send the lender, or the first time that your assets aren't exactly what they want to be, they have the ability to go back and say, well, we're going to have to increase the interest rate a quarter point because you didn't meet X, Y, and Z. The problem with that then becomes you're so far vested into, you could be 3 weeks into a 30-day contract, and at this point in time, 99% of people aren't going to switch lenders at that point in time. They'll pony up a little extra money at the closing table to get the deal back to what they thought it would be, or they'll try to get creative in some other way, but by then it's typically too late. So if everybody could do me a favor, and when you're shopping lenders, don't just get the interest rate, make sure you're getting the APR also. The APR, basically what it does is it takes into account all the lender fees and it amortizes them over a 12-month term to basically give you an instant comparison lender to lender.
Gotcha.
In other words, if Bank of England's rate is a 4.5%, and if our APR is a 4.7%, 4.75%, whatever it may be, they can compare that to another lender who might be offering a 4% interest rate and a 5% APR. Now, how is their APR higher than ours, but the rate is lower? It's because they're charging discount points and a supplemental origination fees to get that rate bought down. So I always want people to double check the APR, and the APR can be found on a loan estimate or an itemized fee worksheet. Please make sure when you're submitting a loan application, when you're going over that information with the lender, you get an itemization of all those costs. Because again, I can go find you. I got a notice in the mail and I saved it. I'll send it to you later on. Somebody was advertising. They obviously didn't know that I've been doing this for as long as I have, and somebody sent me direct mail. This was just in July of this year for 3.75%. And I'm looking at my rate sheet and I'm like, all right, well, this specific scenario, I'm like, I'm not past the point of calling them to find out what they can do for me, but I'm looking at this specific scenario and I'm like, okay, well, our rate would be a 4.625, what's going on? If I show you this thing, the fine print is a full piece of paper on the back side of it. It says that you have to have a credit score between a 40-point variance, that your loan amount has to be within a $200,000 variance, that you're paying 2 points in origination, 1.25 points. So just for example, this was over $10,000 in fees to get that magical rate. Yeah. Oh yeah, it was adjustable rate mortgage. And so but a lot of buyers will call me and they'll say, Tyler, yeah, so-and-so's giving me a 3.75. And I'm like, wow, that sounds unbelievable. Let's dig a little deeper. And 9 times out of 10, when we do that, we're able to educate them on what the best option is.
All right. I think I have the last question.
All right.
So you've picked your lender. You are 3 weeks into it. Something doesn't work. You don't want to lose the house. You can't move forward with that lender. How can Bank of England help with that?
Yeah, absolutely. We kind of got our foothold into this market. Our company is obviously not a household name in other areas of the country, and sometimes people think, until I open my mouth, they think we're from England across the pond.
I did.
Exactly. So the way that we got in is not by telling you what we could do, is showing you what we can do. We're blessed that we have some of the best underwriters. I consider them to be the best underwriters here in Northeast Florida, and I don't have a problem saying in the Southeast. They all work at our local operations center here in Jacksonville Beach. So if anybody needs something done quickly, if you have on the spot question, nights or weekends, whenever it may be, I can just get an answer immediately. There's no calling a 1-800 number, being forwarded over and over again to somewhere out in the West Coast. We do it all on site, and that gives us the ability to be flexible. If someone does call me with an emergency, while we prefer to have a little bit more time, if someone does call me with an emergency, we don't consider it ever really too late for us to step in and try to see what we can do. There is another big box lender here in town that did the same, and that's where that example came from. But they're 3 weeks into the purchase contract. There's 1 week left, and they turned the loan down. They didn't just say that they needed to change anything. They literally denied the loan 1 week before closing, and we were able to come in and get the loan underwritten and clear to close in 3 days, and still got the closing disclosure out. And we're able to close the whole thing in 7 days.
Wow, 7 days. That's
it can be done. It's never too late. We prefer people to get pre-approved early and often. Is what I say. Get pre-approved early and often. It's never too early to do a loan application. But if you do need somebody to come in and save your mortgage, we'd be happy to do that as well.
So I really appreciate you taking the time to do this. What I gather from all this is you have to think of the big picture. We sometimes focus on the teeny little things, but look at the whole big picture. And if you have any questions about anything, hopefully this was helpful. Call me. I'd be happy, if I can't answer it, to hook you up with Tyler. And again, you know what? It is still a good time to buy, and it's still a good time to sell. So I hope you guys have a great day.